What if I told you that one of India's largest and most respected hospital chains, Apollo Hospitals, is about to sell off its entire maternity and infant care division? Picture this: the brand millions trust for life's most fragile moments, births, pregnancies, new beginnings, preparing to hand over the keys to its cradles. Why would they walk away right as the market for Indian maternity and childcare explodes into a multi-billion-dollar race? What's really going on behind the headlines? Today we peel back the layers of India's healthcare gold rush. This is not just a story about hospitals or money. It's about shifting priorities, private equity power plays, and a once-in-a-generation transformation in the business of being born. To understand what's at stake, let's rewind. Apollo Hospitals isn't your average healthcare provider. Founded in 1983, Apollo pioneered private healthcare in India, bringing world-class treatment to a country desperate for quality hospitals. Over 40 years, it built a colossal empire. As of March 2024, 73 hospitals with over 10,000 beds, stretching from Delhi to Chennai and even overseas. Apollo set the gold standard in Indian healthcare, and their specialty units, like Apollo Cradle and Children's Hospital, became household names for maternity care. Apollo Cradle and Children's Hospital, or ACCHL, isn't some side project. With 13 hospitals across India and 363 beds, it's one of the country's top chains dedicated entirely to mothers and infants. Its facilities dot India's megacities: Delhi, Bengaluru, Chennai, Hyderabad, Amritsar, Gurugram, Noida, Ghaziabad. For thousands of families, their children's first moments happen inside these walls. So why sell it now? Let's look at the big picture. India's maternity and baby care market is booming. It's already worth around Rs 30,000 crore a year, over $3.5 billion, and expected to grow 15% each year. By 2029, forecasters predict a $5.14 billion industry. It's a sector supercharged by population growth, rising middle-class incomes, evolving family structures, and a surge in health awareness. But Apollo's not alone. The scene has become a battleground of giants and disruptors. Rainbow Children's Medicare, Hyderabad-based and backed by British International Investment, went public in 2022 and boasts a market cap exceeding Rs 14,000 crore. Bengaluru-based Motherhood is powered by global investment heavyweights like TPG Growth and Singapore's GIC. Cloud9 is fueled by True North, Temasek, and Peak 15. Even Indira IVF, until recently India's largest fertility chain, has crashed the maternity party, launching its own dedicated hospitals in 2024. Across India, private equity is pouring in, a record $2 billion in 2024 alone, up 25% from last year. The money isn't just following the babies, it's chasing the next big healthcare winner. If you look at the government side, there's more momentum. India's maternal mortality ratio has dropped from 130 deaths per 100,000 live births in 2014 to 2016 to 93 by 2021, a testament to better care and policy focus. Government healthcare spending is set to hit Rs 95,957 crore in 2026, and a flagship insurance scheme, ABPMJ, now covers hospitalization costs for over 120 million families. Technology is reshaping access to. Telemedicine in maternal care is exploding, with 20% compound annual growth estimated over the next 5 years. IVF cycles are up 18% in a single year. Caesarean section rates have soared well past the WHO ceiling, with India's rate at 21.5%. For some, this signals progress. For others, a brewing crisis in over-medicalization. This ecosystem is evolving at dizzying speed, but the competitive pressure is ruthless. Hospitals are racing for brand recognition, better technologies, and crucially, deep-pocketed backers. Accreditation and quality are no longer optional. Dr. Ritu Sethi, a leading gynecologist, put it bluntly: increased focus on quality and accreditation will be crucial for maternity care providers to thrive in this evolving regulatory landscape. So, why is Apollo, with all its legacy and reach, preparing to walk away from this high-growth market segment? The answer is layered, and it hits on the deepest shifts in India's hospital business model. Let's zero in on Apollo's own numbers. Despite a trusted brand and nationwide presence, Apollo Cradle and Children's Hospital posted a net loss of Rs 17 lakh in the year ending March 2024. That's a small figure for a conglomerate, but it tells a bigger story. Even with a booming market, competition, costs, and regulatory scrutiny are squeezing profits. Meanwhile, standalone giants like Rainbow have posted net profits up 22% in the same period, riding agile specialist models. There's strategic logic at play. Dr. Alok Roy, a senior healthcare executive, offers this sharp take. The Apollo Cradle divestiture reflects a strategic realignment to focus on core hospital operations, potentially unlocking greater value. Translation? Apollo wants to double down on its major multi-specialty hospitals, leaving the niche, highly specialized maternity business to players who can operate at greater scale or with more targeted expertise. By selling now, when the sector is hot and private equity funds are hunting for branded, scalable assets, they can extract maximum value. Allegro Capital, a noted investment banker, is running the sale. The valuation on the table, Rs 1,000 to 1,200 crore, or roughly $120–145 million. The pitch? ACCHL is a turnkey platform for any investor or operator eager to ride India's baby boom. But this is about more than one corporate deal. It's a sign of a much bigger force: consolidation. As Vishal Bali, another healthcare industry leader, notes, the mother and childcare segment in India is ripe for consolidation, and Apollo Cradle's sale could trigger further M&A activity. We're witnessing the early innings of a mega trend: hospital chains getting leaner, focusing on core strengths, and offloading specialized branches to ambitious upstarts or hungry private equity funds. The winners? Those with scale, laser-sharp specialization, and the tech muscle to reimagine healthcare delivery. And tech is the secret sauce. Dr. Devi Shetty, a hospital entrepreneur, predicts, technology and innovation will play a transformative role in improving access and affordability of maternal and child healthcare in India. Digital health startups are attracting record funding. As Kunal Bal, co-founder of Snapdeal, observes, healthcare startups are attracting significant investor interest, particularly those leveraging digital platforms to enhance service delivery. Behind the scenes, there's a scramble, not just for patients, but for algorithms, electronic medical records, telemedicine platforms, and AI-powered diagnostics tailored for mother and child care. It's not just about more beds or fancier buildings. It's about who can scale personalized care efficiently, especially into India's vast, underserved rural markets. There are other hard realities. While the market is growing, families still pay heavily out of pocket, on average $155 for maternity care. Quality varies widely. Regulation is tightening, and only hospitals with solid accreditations and emergency protocols are trusted by the marketplace. Meanwhile, the demand for premium care, private rooms, advanced neonatal treatments, IVF, and specialized surgeries continues to surge. Yet the business requires massive constant investment to stay on top. The risk? Those who cannot keep up may vanish into the jaws of the better-funded or tech-savvy giants. It's clear why private equity funds are circling ACCHL. As Anurag Gupta, an investment banker on the deal, says, "We are targeting leading private equity funds who recognize the growth potential in India's specialized healthcare services. These funds want to snap up branded players, inject capital, bring in management expertise, and engineer rapid growth, sometimes aiming for a lucrative IPO exit in just a few years." But challenges loom. High regulatory complexity, the imperative for accreditations, and the increasingly competitive landscape mean that only the most agile or most capitalized will thrive. Many regional chains are already merging or seeking buyouts, and the government is both a benefactor and a wild card, with new policies, public insurance, and spending that could upend private sector margins or open up new vistas for growth. So we reach the heart of the conflict. India's maternity care market is booming, but only those who adapt, through consolidation or radical tech upgrades, will survive. Apollo's sale could be the domino that triggers waves of mergers and offers, forever changing who controls the business of childbirth in India. But as the bidding war heats up, the big question remains: who will win the race to dominate India's $5 billion baby care future? The old hospital giants, nimble startups, or the relentless private equity titans? And what will happen to quality, affordability, and innovation in a market where the stakes are literally life and death? We're about to witness the next chapter, a battle that may set the blueprint for healthcare transformation in emerging markets everywhere. But before we get there, we need to dig deeper into the mechanics of this sale, the risks and rewards for buyers, and what it all means for Indian families in search of the perfect place to welcome their new life into the world. Stay with us, because what happens next could change how India, and perhaps the world, brings its children into the future. So, as the sale of Apollo Cradle heats up, the real questions emerge. Who will take over one of India's leading maternity and children's hospital chains? And perhaps more importantly, what will this mean for the millions of Indian families depending on high-quality maternal and child care? Let's start by peering into the boardroom drama underway. Multiple reports confirm that Apollo has appointed Allegro Capital as its dealmaker, targeting leading private equity funds for the transaction. Names like TPG, Temasek, and GIC have been floated in industry whispers, with their existing interests in healthcare hinting at strong synergies. Domestic players like True North and even large hospital groups such as Rainbow Children's Medicare are speculated to be studying the deal. The estimated price tag, a hefty Rs 1,200 crore. But this is not just a deal about numbers, it's a signal. The Indian mother and child care market, already worth about Rs 30,000 crore annually, is poised to grow at a blistering 15% a year in the near future. New players are sprinting in. Indira IVF, for instance, just entered the maternity space in March, and established giants like Cloud9 and Motherhood are already backed by deep-pocketed global investors. We're entering a new era, consolidation and hyper-specialization. Dr. Alok Roy, a prominent industry voice, put it bluntly. Apollo's move reflects a strategic realignment to focus on its core, while unlocking value for specialized assets. In other words, the era of one-stop hospital giants is quietly giving way to nimble, focused networks. What's the intrigue for patients and families? A huge one. Whoever acquires Apollo Cradle will inherit not just beds and brick-and-mortar facilities, but deep experience in handling complex maternal and neonatal cases. They'll also face a challenge, integrating these hospitals and their ethos, while pushing for profitability in a sector where empathy must meet efficiency. The likely buyers? Most analysts agree on this. It will be a private equity, PE fund, or a strategic investor who sees India's rising birth rates, higher family incomes, and digital adoption as a springboard. PE funds, notorious for their relentless drive for returns, have already poured $2 billion into Indian healthcare in 2024 alone. Vishal Bali, a veteran investor, said, "The mother and child care segment is ripe for consolidation. Expect a flurry of M&A activity post-Apollo Cradle sale." But there are deeper trends at play. The first is technology. Telemedicine for maternity and baby care is exploding, projected to grow at 20% annually for the next 5 years. In far-flung rural communities, this could be a game changer. Imagine a pregnant woman in rural Bihar consulting a neonatologist in Delhi via smartphone video, with AI-driven alerts flagging early signs of complications. Tech and digital platforms are also changing how hospitals attract, serve, and retain patients. Kunal Bal, a healthcare startup founder, points out, startups are leveraging digital platforms not just for bookings, but for postnatal education, nutritional guidance, and emotional support. Investors are chasing the ones who crack the model. Yet for all the optimism, risks loom. Private equity's reputation for cost-cutting often makes healthcare professionals nervous. There's a fear that in the chase for higher margins, critical but less profitable services might be sidelined. Will the new owner keep investing in upskilling staff? Will patient care standards rise, or will they plateau? Dr. Ritu Sethi, a well-known obstetrician, observes, increasing focus on quality and accreditation is non-negotiable. Regulatory scrutiny is tightening, and only the best will thrive. That brings us to a second wildcard, regulation. The government is finally upping its game. The budget for healthcare has jumped nearly 10% for FY26. New programs like ABPMJ are expanding insurance coverage, giving 120 million families up to Rs 5 lakh per year for hospital care. And there's a push to raise total healthcare spending to 2.5% of GDP by 2025. This means more patients will be able to afford private care, but price controls and stricter licensing could squeeze margins and force providers to innovate or perish. What about patient outcomes? There's some good news. India's maternal mortality ratio has dropped from 130 per 100,000 live births in 2014 to 16 to 93 in 2019 to 21. Manyata-certified hospitals have boosted their ability to manage emergencies by 70%. But challenges persist. India's C-section rate is at 21.5%, far above the WHO's recommendation, suggesting both medical improvements and the emergence of unnecessary interventions in some cases. Here's where the next chapter takes shape. There are 3 possible futures. First, the consolidation scenario. Larger, better-funded networks emerge, swallowing up local players and standardizing care. This could mean wider access, but maybe less personal touch. and a risk of smaller towns being underserved if they're deemed unprofitable. Second, digital transformation. Telemedicine, AI, and home-based monitoring become standard, making high-quality advice available beyond city limits. Startups and big investors will battle to control this frontier. Third, policy-driven change. The government ramps up regulation, imposes quality benchmarks, and expands insurance. This could reduce catastrophic out-of-pocket spending, but adds layers of bureaucracy. Who adapts fastest to the new rulebook will win. Now, what does all this mean for you, the viewer, whether you're a parent, an aspiring doctor, an investor, or simply a concerned citizen? First, if you or someone you know is seeking maternal or neonatal care, this consolidation wave means more choices, but also a need for greater vigilance. You should pay close attention to a hospital's accreditation, like Manyata, track record, and transparency. Bigger chains often have better emergency systems, but don't be afraid to ask questions about care protocols, C-section rates, and staff qualifications. If you're an aspiring healthcare professional, the skills landscape is shifting rapidly. Upskilling in digital tools, telemedicine, and emergency protocols is not just a bonus, it will be essential. New employers will demand flexibility, tech savviness, and a commitment to both empathy and efficiency. Those working in or aiming to join large networks will likely enjoy greater job stability and opportunities to learn from best practices, but may also face more demanding performance metrics. For investors and entrepreneurs, India's mother and child healthcare market is a gold mine waiting to be tapped, but with caveats. As Rana Mehta, another industry analyst, said, private equity interest is at an all-time high, but buyers must remember, healthcare is not just a business. The reputational risks are real, and future winners will be those who invest in both profitability and patient outcomes. Startups should focus on blending medical expertise with digital convenience. Think remote monitoring, AI-powered diagnostics, or platforms that provide holistic family support. The pandemic proved that digital health is here to stay. The winners will be those who win trust, not just clicks. If you're a policy watcher or activist, now is the time to push for smarter regulation. Insist that new owners of hospital chains publish their patient outcomes, invest in staff training, and avoid practices that prioritize profit over care. The government's moves to increase insurance coverage and set quality benchmarks are positive, but vigilance is key. The goal should be universal quality, not just universal access. Most of all, the transformation happening now is a rare chance to push India's healthcare system towards global standards. The best outcome? A system where technology bridges distance, economies of scale lower costs, and the human touch remains central to every birth and every life saved. So, let's come back to our original question. Will this dramatic transformation actually benefit Indian mothers, children, and families? The honest answer, it depends. If buyers and new owners prioritize long-term value, invest in people and technology, and respect the trust placed in them by families, the answer is a resounding yes. Early indications, such as the government's increased spending, a sharp drop in maternal deaths, and an explosion in innovation, are all signs that we're moving in the right direction. But if the sector slips into pure profit chasing, cutting corners or leaving smaller cities and the poor behind, the outcome could be far less rosy. The biggest secret? Even as the headlines focus on mega deals and valuations, the real revolution is being led quietly by thousands of frontline nurses, community health workers, and local clinics, armed now with digital tools and better training. They are the ones ensuring that safer births, faster emergency responses, and healthier childhoods become the norm, not the exception, in India. And you as a viewer have a role to play, whether it's choosing your healthcare provider, supporting digital health initiatives, or demanding transparency from policymakers. Your voice and choices matter. If you found this deep dive valuable, make sure to hit the like button, subscribe for more insights into India's fast-changing industries, and share your thoughts in the comments. Do you think tech and big investors will truly transform mother and child care, or are we risking a loss of personal touch? Thank you for watching, and remember,